The moment we have all been waiting for is finally here. The good old Santa Claus Rally is starting this week. Honestly, it's not that big of a deal. Don't get all juiced up about it. It might happen, it might not happen. So I'm going to start off with some stats for you just so you know what it is. Again, reiterating, it is the last 5 days, last 5 trading days of 2025. And the first 2 trading days of January 2026. So let's go through this real quick. The last 5 trading days are Wednesday, the 24th. It closes early. Friday, so we're closed on Thursday, Christmas Day. Friday, we're open up on the 26th. Then we have the weekend. Then we have Monday, the 29th, Tuesday, the 30th, and then Wednesday, the 31st. So those are the last 5 trading days, the 24th, 26th, 29th, 30th, and 31st. Then the first 2 trading days, we are closed the 1st for New Year's Day, obviously. So then the first trading day of 2026 is Friday, the 2nd, January 2nd. And then the second trading day of January 2026 is Monday, the 5th. So that is what the Santa Claus Rally is. That is where it begins, is this Wednesday. So prepare for it. That's what part of this video is. Some more stats on for you. Most of the time since 1950, we have had a Santa Claus Rally, and that is basically 79% of the time. And within that time frame, there's been an average of a 1.3% gain over that time frame, and it fails obviously the other 21% of the time. So some other stats for you. If there is a Santa Claus Rally, the year after tends to produce a 10.4% gain on average. If it does not occur, the average year it returns, they tend to drop 6.1%. So if the Santa Claus Rally doesn't occur, we might have a down year. But if it does occur, then we're looking at an average of a 10.4% return, which is, not that bad. Other important things that came out this week is the CPI. It came in at 2.7% year over year just this past week, which was lower than expected. I think it was a 3.0 or 3.1%. So we had a shock there. That's basically what this was on Thursday. So here I have up the SPX, the cash index for the SPY 500, sorry. This is the reverse head and shoulders that I've been talking about the past couple weeks in my videos. It looks like we may have it now. We have a left shoulder, a head, and a right shoulder. This right shoulder, if you want to base on technicalities, it is higher than the left shoulder here. And then here's that neckline. This is the look I have been looking for overall in the general market. This looks good. This little sell-off or selling pressure from last Friday into Wednesday of this week, I think has set us up for an appropriate Santa Claus Rally. Also, look at the volume here. This is the highest volume we've had since April of 2025. So basically since the downturn back in April when all the tariff stuff was coming out. So if that's meaningful, you can't fully trust volume, just so you know, because of dark pools and swaps and things like that. But it can be valuable for some traders. Let's look at the RSP, the equally weighted 500. Again, it broke out. I was saying last week it might come back to a retest. It did indeed do that, and it looks like it's holding so far. So this, again, is the overall market that takes out the heavy weights and it equalizes everything. So the overall general market is looking healthy and strong at the moment as well. Here's the cash index, the NASDAQ 100. That's what I mixed up earlier there. This also, again, is a head and shoulders type look that I have been looking for. So here's your neckline, left shoulder, head, right shoulder, high volume as well. So this is a nice setup in general. Here's the equally weighted, again, inverse head and shoulder, left, head, right shoulder, setting up above EMAs, holding the 50 EMA above the anchored VWAP from this low and from the high. So everybody from the all-time highs and from this prior low is in the green. So overall, it is looking good for a potential Santa Claus Rally. Let's move on to the Dow. It's still holding highs. It's consolidating here. We have some selling pressure within this 485 to 480-ish area. Nothing too concerned about, honestly. Let's move to the Russell. This is the first pullback after breaking out to all-time highs. So, some people like to buy the first pullback after breaking out to all-time highs. This is technically a higher low, even relative to this December 2nd low here. So the trend is up, structure is up. There's a cash index for it. XLB, I've been saying a trend reversal here. That is holding true. There's another pullback to retest of this area, and it's starting to push away. So that looks good. It holds 1.7%. So it's not necessarily a heavy weighter of the overall, but it looks good for the continued reversal in trend. XLC, 10.7% of the S&P 500. Netflix continues to get hit. I missed short on it this week. I'll take you through it in a second. But overall, it's just kind of chopping and consolidating here. So nothing too spectacular. Energy kind of getting hit. Looks like it's going to be a short if it can break this 44 and then this 43.75 area, especially if it breaks down from the 200, but nothing specific here. XLF financials, they look pretty good. We have obviously we have higher highs and higher lows. We have a nice push. It kind of flagged, nice little price correction down to the 8 EMA, and we get a nice push off of it today. Higher volume. Looks like it'll continue. Visa, JP Morgan, Berkshire heavyweights in the XLF. XLI, this is the first pullback after hitting all-time highs here. They pulled back to the 50 EMA. It is kind of choppy. I think this needs to resolve some more, but if you like the look, Uber, RTX, and General Electric are heavier names in here. XLK, tech, the market won't go anywhere without tech, really, honestly. It's 34.6% of the S&P 500. Top names last week that I checked was NVIDIA, Microsoft, and Apple. We have a higher low here. Price is above the all-time high anchor VWAP, this prior low anchor VWAP. And as I was saying last week, what we could do to monitor an entry is set an anchor VWAP to this prior high. And once price is over, we know the average participant in the market from this high is above water. That happened today, right? So average participants, even from here, and basically everybody is above water, and pressures are going to start feeling the pressure. Shorts are going to start feeling the pressure. XLP, nothing significant, still can give above this supply zone here. Let's move on to real estate. That is nothing significant either. XLU still looks weak, kind of time correcting to the short-term 20 EMA on a downtrend. I still think we are going to test this 40 to this 41 area. Shorts possibly there. XLV, healthcare, still looks pretty good. So I've been saying, hey, we get a little retest here. It bounces back, and now we get a time correction, consolidation. Price is still above the short-term EMAs. Price is above the anchor VWAP from all-time highs and this prior low. It looks good. Eli Lilly, Johnson & Johnson, and AbbVie are heavyweights within the healthcare sector. So if you trade those, I look into those. XLY, Tesla, closed all-time high close this week. This is helping push this guy higher. Amazon does not look the best still. It had a nice push up today, or overall this week, but it doesn't look the best. We'll go over that shortly. Let's go over Bitcoin, IBIT, the Bitcoin Trust ETF. Just kind of consolidating here. I still think this is an H pattern. I still think it rounds down, and it has a potential to go down to 43.50-ish here. Basically the same thing with Bitcoin. This is a dirty chart. I apologize, but this area is an obvious area that it continues to hold. It could be building a position here within this 84 to 86-ish area. That's a level of demand so far. But if that breaks, I'm still, I don't think 75 is out of the cards, and it can happen rather quickly if things turn down. But it could also just continue to consolidate here and maybe set a higher high versus this 94,500. So we'll see what happens. I'm not super interested. XBI, trend is your friend. It is up. It is obvious. It is now time correcting, consolidating up here. Prices are being accepted up here, and then we have a nice little volume push here. So it's probably going to break out next week. I wouldn't be shocked if it does. Let's look at the weekly chart real quick. It is hitting this prior support area, which now becomes resistance, but it's good that it's time correcting and chopping in here. So if it can break out back into this zone, maybe we head to 134. We shall see, but overall it still looks good. Let's look into semis. showing some life, setting a higher low. Everybody is above water from this prior low. If you care from the prior high, let's find that out. It was rejected at the prior high anchor VWAP, but overall, it looks pretty good with a nice pump. GLD, time correcting, staying above the short-term EMAs. That gap has been filled. I can take that away. Overall, it kind of looks like it could very well break out next week. So I will be trading gold and commodities most likely next week. GDX, the gold miners ETF, cup, handle, breakout, retest of prior highs. Now it's starting to push away. So GDX looks great as well. Silver continues to just absolutely rip higher. It's following the 8 EMA. It's probably more so the 5 if these little wicks are probably tagging it. Either way, I'm not chasing it here. We do have a new gap that formed on Wednesday from 58.58 to 57.99 that still has to be filled. Left to be filled. I missed one down here as well. I'm not going to do that right now, but let's move on to natural gas. We have in our room, we've been looking to long natural gas, not UNG specifically, but actually the future for natural gas. We just have not gotten the bounce yet. It's by a prior support area, but it just hasn't moved yet. It did have a nice 10% move from one of our trades in futures land, but overall, it hasn't moved as we were anticipating so far. All right, let's move on to heavyweights. Heavyweights this week, Microsoft, it continues to do nothing. It's just chopping around. Pay attention to its volume. For those of you that like anchor VWAPs, you can mark anchor VWAP to this high volume node here, or high volume bar, I should say. Nodes would be on the side for volume profile. It's just chopping around the 200 EMA. There's nothing wrong with it. It's just basing underneath all of this, probably absorbing whomever wants to sell here. So if the market wants to trend back up, it'll probably accept back up into the zone, chop around, and then maybe go retest the all-time highs. When that happens, I'm not sure. I'm not interested in it, honestly. NVIDIA, not super interested in it right now. I still think it has some time to work off. Apple is accepting back into the zone. It failed to break out, and range was opposite target. It basically did that. It's still holding the inclining 50 EMA. It is below the short-term EMAs, but I think moving into next week, this has a potential to continue to round up, test all-time highs, and then maybe even break out. So Apple looks good. It will be a focus for me next week, as it has been these prior weeks. Amazon, nothing special here. Let's move on. Avgo, Broadcom, nothing special here. Just continues to chop around into this zone. It's a waste of time, in my opinion, for what I do. Meta, high volume here. I don't know how to read this. It's rejecting at the 200 EMA right now. It's just choppy and sloppy. I am watching for this earnings gap fill, but when that happens, I don't know. As of now, the anchor VWAP lows, people are above that. And then if you want to do an anchor VWAP from this gap down, the average participant is above that as well. So it looks good. It's curling. There's a potential for this earnings gap fill, maybe into the end of the year here, into the beginning of next year. Yet at the same time, if tech continues to get hit overall, this could continue too. So I don't know. I think it still needs more time to work. Netflix, I tried to short this at 95.25 the other day. I'll give you the look on it. It was this, where was it? It was Wednesday. It was right here. So it got hit in the morning, consolidated, and then I tried to short it right here, but I missed it. It's, it would have been a decent trade. It didn't follow through as I was expecting. I was really looking for it to break lower, but honestly, the trend is still down. If it breaks this, what is it here? 92.35 low. The pressure continues to be down. Lower lows are being made. Lower highs are being made. Short-term EMAs are down. For you death cross people, we have a death cross, the 50 crossing the 200 EMA. I still think this is going to 82. That's that. Tesla, I started a trade position today for a potential gap up and run into next week. Why? One reason why is because we have an all-time close, all-time high close today. Congratulations. It has broken out of this base after undercutting it, accepting back in. Now opposite end range has been tagged. It has broken that. It is accepting it. We have 2 inside days from Wednesday, maybe if you want to call it 3 inside days here. And so whatever way, if you want to go on the 30-minute time frame here, whatever way this breaks, you most likely want to go with. I am already pre-positioned for it, for the break. So we'll see what happens next week. I have my risk managed. And if it doesn't work, it doesn't work. That's fine. That's, it's literally the risk you take as a trader. You have a plan, you execute, you don't overthink it, and you go with it. So I am going long on Tesla with this all-time high close. Google, this is finally showing some life. I've been saying for the past week and a half or so, I have been looking for this gap fill. We finally got that gap fill, so I can delete that. We have high volume here. I think the next line in the sand is this low here at 296.12. I think into next week, this continues to push higher. It's a super strong name. This is just a slow bleeder over the last 2 weeks or so, maybe 3. Hasn't really been doing anything, just kind of, chopping along. But, as long as it holds this retest high here, which it has so far, it still looks good. We just need some strength and some oomph to get us going. CrowdStrike, it's not doing anything, waste of time. Now the chart's messed up, waste of time either way. Palantir, I did take a trade on Palantir. I talked about it last week in my video. If it broke that downtrend line on the 30-minute with my other indicators that aligned, I was going to take it. So I took it on Tuesday, and then I got stopped out on Wednesday. So the trade was 184 by 181.10. So I got stopped out just below the low. And, just 2 days later, I could have re-entered on Thursday, but I do not trade on large gap days, especially when things just chop sideways. And so I didn't take it because I didn't necessarily trust it. And then we just get a gap up, and the overall market just chopped, and this thing kind of just chopped around all day too. We got a nice little push at the end of the day, but so I did not re-enter, which is fine. Either way, this is still a top look moving into next week. I think this hits all-time highs, especially if we do get a Santa Claus rally, and it's looking good to trade at the beginning of the year. Robinhood, that is. This has been pretty tough. Overall, I think it's a waste of time. I did say the other week that I was looking for a higher low within this 123-ish range here. I did take a trade, but I got stopped out right away on Friday. So this week I have been staying out of it. It's still choppy, still indecision-like, not my type of trade. It's a waste of my time. Internals of the indicators, they are getting stronger, but overall it's not doing anything but chopping around. So I'm just gonna focus on the 3 names that I said already is Palantir, especially into a potential Santa Claus rally, Tesla, especially into a potential Santa Claus rally and into early 2026. And then Apple looks good as well if it wants to break the short-term EMAs that everybody likes to look at and potentially start rounding up. Otherwise, second tier, number 2, I'd say Google. Google has potential here as well. And if you're looking for a short, like I will be in Netflix. Okay, that wraps it up. Hopefully these things are valuable for you. If you guys have any ideas, obviously comment, like, share, subscribe. I put these videos out each week. So if you guys have any feedback for me, I am all ears. Otherwise, we are part of a training community. If you guys are looking to join a professional trading community, no BS, no hype, just straight down there to make money and support each other, then obviously reach out to us. Otherwise, have a great week, trade well, prepare well, and we'll catch you next time. Later.